Okay, so welcome to Trading in the Noise. This is a new YouTube channel about trading. And, a lot of people, they set up YouTube channels just to, they want to make money with it. They want to do something with it. They want to get their name out there. They want to do something. That's not what I'm here for. You see, I'm here for because I'm a trader. And I have no way to verbalize what I'm saying to anybody that understands me. My wife does not understand the words that come out of my mouth when I speak to her about trading. So I just kind of wanted to do something so I could get some conversation back and forth about trading, about what I do. If you learn something on the way, good. If you don't, I don't care. I'm not gonna try to gouge you for any money. I promise you that. I don't have a course. I don't have anything for you to buy from me. I don't want you to buy from me. I don't want any customers. I don't want any bosses. I just want to trade, and I want to talk about it. And that's what I'm here for. That's all I'm doing. If you enjoy it, good. So today is March the 6th. We just got done trading today. Let's go ahead and take a look at the chart of the ES here. We can go through some charts. We can see 5 minute. Let me move this microphone right here. The 5 minute on the ES here. You can see what happened is we opened up and we shot up and we came streaming back down. And this market's pretty freaking crazy. Let's go ahead and take a look at a little bit longer time frame here. Let's go ahead and take a look at a 30-minute chart. And you can see what has happened over the last couple of days. This was when that Raphael, the Fed guy, Raphael, I think his last name's Bostic. See, at this point right here, he said something that the market took as positive, I guess. Well, I don't know if we can actually say it's positive. This has all the earmarks of a short covering rally all the way up here. How do you know it's short covering? Because it's vicious buying. These people are emotional when they're making these trades. I mean, I'm sure some people went long and they're now in the money, but this is emotional trading right here. See, this is an emotional trading. This bar right here, emotional trading. Okay. And it keeps going up. It took out the previous regular session's high with this bar right here. And it came back down, but it took it out. This is what you consider short covering, a short covering rally. So, with that being said, we are waiting, more from Jerome Powell, which he speaks tomorrow morning. I think he's speaking for the next 2 days. Let's see. And he's going to be speaking in the morning. So, if you're a directional trader, you went long, man. You like the last couple of days. That's fine. That's good. There's lots of ways you could have played this too. You see today, buying kind of petered out. Which, hey, let's go ahead and let's take a look at. You look at this. This is some parabolic buying right here. This is parabolic buying. We got the fib retracement here. Let me zoom in on this one a little bit. See, that is some buying right here. This big green dildo of a candle right here. That took out, that went all the way up to the expected move. That's great. We got the Theotrade expected move pivots right there. I don't subscribe to them anymore. Doug Kaufman, he's a good guy. Got lots of good information. I like doing my own thing, though. So we got, and you can see it came back into this little balance area, this little channel balance area. I mean, who knows what the market's going to do? You know, this big green candle would surely indicate that, you know, the market may be long from here, which it might be. You know, could be. We could see a pullback. If we go back to the 30-minute chart, I would be looking for something, you know, hey, maybe buy this somewhere around the 50% retracement of the move here. Let's go ahead and let's just take some regular trading hours. So I got this set up here to turn off the regular trading hours. Let's go ahead and take these off. Let's go ahead and hide this. Let me get this studies here. I'll go ahead and edit the studies. Let's just say, let's show study. Let's take it off. Okay. Apply. There we go. And I don't know. We'll keep those lines on there. I hope they're not. Let me take them. Let me do a new study set. Let me save. Let me say create a new drawing set. We'll call this YouTube drawings. Okay, so now we got a new study set. I don't like those freaking grids. I got to get the grids off of here. Son of a... Maybe I'll edit this out. Maybe I won't, because I don't give a shit, since you're not buying anything from me and I'm not selling you anything. Anyways, let's take this grid off here. Then go to appearance. Grid. Let's turn the background. Let's go ahead and change it to blue. Okay. Okay. That's good. That's a pretty chart. That's a pretty chart. It's the color of the ocean. So let's take the let's go ahead and let's take the bottom of the move here. I think this is a good place to go ahead and draw fib retracement. Let's see. So we go right there. Bam. So we went up today, and it brought us all the way back down to the 23.6 fib retracement. I mean, it's probably going to chop around in there, but who knows? Because Powell's testifying before Congress tomorrow. He may say some shit that will make the market go up or go down. You don't know. You don't have any freaking clue what's going to happen tomorrow. I don't even know why I'm doing this. But anyways, let's say we go ahead and we get a pullback to the 38.2% retracement. We also got some previous resistance right here. We got a lot of stuff to kind of run into right there. So, I mean, that's pretty much a good, you know, that's probably a good place to go ahead and say, okay, if I'm going to take a long position, I'm going to do it at the 38.2. Right down there. So we're looking at 40.24. I mean, you could be aggressive right now. And you could take a long right here, man. The 23.6. You could take a long here. You know, I mean, what would that long actually look like? Let's go ahead and let's see. Let's go ahead and play some options here with it. Let's go ahead. Go to the Analyze tab, and we're going to say, hey, what expiration? So if we want to say for this, say for Wednesday, we want to do something pretty quick. We say Wednesday, get an expiration here. Oh, man. They're going to screw us. They're going to completely screw us. Let's say if we wanted to play this thing. Let's say we want to go ahead and get in a position right now, but we don't think it's going to go below 40.24. What could we do? Well, I mean, an easy thing to do is to do a credit spread. But look at how wide these spreads are. You see, I'm doing this at the wrong freaking time for this shit with the options. The options market's closed. It's 2:30. It's 2:30. The futures market is closed. I picked the freaking 1 hour that the future market is closed to do this. Well, anyways, let's go ahead and let's take a look at some other things. Let's take a look at some crude oil. It's up 1% today. Let's take a look at the chart. Take a look at the chart on crude. So you see, I've got these lines all drawn in here. Let's go ahead and let's take a look at the weekly here. You see, that's quite a consolidation right there. That's a consolidation. Yeah. Which way is it going to go? Which way is it going to go? Well, I would imagine it's going to go this way because of the seasonality of oil. People like to drive in the summertime. You rotten climate destroying motherfuckers. You want to drive? I'm just kidding. Look at that. I mean, and this could be this is a balance area. And this could be a more realistic line right here. Let's just, let's go ahead and draw this one in here. That could be a more realistic area for the balance because it only hit there once. This red candle pretty much circumnavigated this whole balance area range. Now we've just been trading in between there. I'll be looking for a breakout above this. Just because of the seasonality. I mean, it kind of looks like it's a bear flag. But just because of the seasonality play, I would definitely be looking for a play outside of this. I'd be looking for a trend to go up to there. You could possibly play that with a butterfly, but we can't look at that now because I chose to do this at the time. The options market is closed. Okay, let's go ahead and let's take a look at the VIX. Volatility index. You see we come back down to the low right here. This is pretty much the low. We're hitting right here at the low where it's been. So for the stock market, that means options prices are low. Of course, you should know that. But my wife wouldn't know that. So anyways. The TNX. Of course, this is the Treasury Index. You see. On a little bit of a pullback, but it went higher. Let's take a look at the weekly. You can always get a better grasp of the weekly. Now this candle right here could make you take a pause on any long positions. You'd like to see that taken out before you go short. But you can see it. It did. It's kind of, if you draw a line like this, say you start right here. I gotta get a trend line. Shit. Okay. It's kind of a broadening pattern, Definitely getting more volatile in the index, in the Treasury Index. I don't know. You could draw it like that, but this would be the trend line, and then the trend line broke was about a month ago. So, I mean, I guess this would be the trend line if you're going from highs to bottom. And I guess that's what I should do. I should get in, how do I draw a trend line? But I'm not going to do that. Maybe some other time. Okay. The Euro futures. So it's been on a bit of a pullback. Still looks pretty, still looks like it's in a pretty decent uptrend. Yeah, trend is definitely down right now, but that's just the daily trend, You can say, or just the weekly trend. We're coming off of stuff here, and it looks like it keeps bouncing into this little consolidation zone right here. That's right. That's Interactive Brokers. That's the broker I use. And they got this English guy that comes in and talks to me every once in a while. And it kind of freaks me out. Anyways. What the hell did I do there? Let's go ahead. We got to do this. Automatic. What the hell? This expected move. I'm turning that off. I'm going to turn that expected move off here. Edit studies. Auto expected move. Let's go. Show study. Apply. Now that's better. That's better. So if we look here, we got a nice little consolidation zone that built right there, and it broke through, and now it's coming back into it. Let's go ahead and let's measure these this consolidation move. Let's get a nice little box here. Let's measure that move. So here is your consolidation zone right here. It broke through, came back out, and then went through again and went down. Now we're coming back into it. This could be a good place to short that. This could be a good place to short the Euro futures. It doesn't look that strong right there, and it came up, and of course you could say, hey, let's short it. Could play it short with options. Who knows? That could be a good place to go short. But you'd be wanting to target somewhere. I mean, at the very minimum, you'd want to be targeting the low of this move. This is a pretty popular spot to stop for the EuroFX futures. And right now, you can totally see that it is completely at the 20-period moving average. Right now, and the center Bollinger Band, of course. Let's go ahead and let's take a little bit of a smaller look at this. I'm going to say, hey, let's take a look at the 30-minute. Yeah, you see it's getting right into that. And it's had some trouble there. It's had some trouble, a lot of trouble right here in this region. You see this region right here has not been kind to it. Even today, it failed there again. So I think, this is all tied into the dollar, the interest rates. This is, they're definitely going to be waiting on more information from, Powell over the next couple of days, or possibly, even waiting for the interest rate announcements. But I would say definitely, just technically speaking, you could take a short right here. You could definitely take a short. Let's see. Are these options working? No, they're not rolling. They're not rolling. That's okay. Let's take a look at what Bitcoin's doing. What Bitcoin did today. So Bitcoin, of course, coming back up into this area that it has failed before. It's coming back down off of it. I mean, if you think Bitcoin, let's see. I mean, Bitcoin was up pretty much in the morning. Bitcoin was up today, wasn't it? No, it dropped down. What the heck? It got its ass kicked today. I'm going to get rid of this VWAP. Let's go ahead and let's show this sunny. Yeah, it got its ass kicked today. I don't know what I was looking at, but man. You can see that zone, this zone right here, it's had trouble. It's had trouble. It could be coming back up. It could be going back down. I mean, the safer play is going to be there. I mean, what's the risk to reward ratio? Let's just, if you wanted to short the futures in Bitcoin, let's say if you took it short right now, you're going to be looking at 22,425. Okay. 22, well, let's see, 22, about 22,000. And you're going to be risking up to about over 25,000. So that's going to be about 3,000 of risk. Let's see how much you can make. 22,000 on into that one. 15, so 7. You're going to be risking 3 to make 7. So that's a little bit better than the 2-to-1. If you wanted to take that play, that's not a bad play. Not a bad play. Let's see. Coin. And that kind of tracks Bitcoin a little bit. If you wanted to do it, with a stock of some sort, so you don't have to play a future, you could do that. You could play this. I mean, target this one at 31.55. I mean, let's say that swing high is going to be your stop. So that's $88. 60. 62. So what is that? That's $16 of risk. And you could go all the way down to 31.55. I mean, that's a decent risk to reward ratio right there. It's not bad. If you want to play it a weekly. Maybe tomorrow they'll open up during the market so we can take a look at some option plays, and analyze some of that. Let's take a look at the 30-year bonds. See what they're doing on the weekly. Now they are in this consolidation zone right here. Now they broke through. That was definitely a look above or look below and fail right there. We could be going back up. Could be going back up. Could be going back all the way up to there. That's not a bad risk to reward play right there if you're going to make the play to go up there. See what the daily looks like. Yeah, I mean it bounced right off the 20 period MA. I don't know. Maybe it will. Maybe it won't go back up there. It's tough. You gotta just make sure the risk rewards are good. The Aussie dollar looks a lot the same as the euro. Let's see what gold's doing. I got some plays in gold. You guys want me to visualize the gold play? You guys probably are not watching anymore, are you? And I wouldn't say that I blame you. I mean, this isn't the biggest top-notch program there is. You probably are off watching Ross Cameron and doing his shit. Where he does his low float stocks. Low float stocks. You know what a float is? Float is the amount of shares that it has available for trade. Let me go ahead and see if I got... let me see what we can do. We can take a look at... Let me go and make a watch list. So if we want to do... Let's go ahead and let's add the float in here. I think it's shares in this platform. Yes, shares. So we have to have 8% put call. Let's go ahead and let's just get rid of the put call ratio right now. Remove item. Let's go and put shares in there. Let's go and say okay. Of course, we got to resize this. We got to resize all this. I should have been more prepared. My first YouTube video. Should have been more prepared. Oh well. I doubt anybody sees it anyways. I'm not going to advertise it. So anyways, this is the S&P 500, and we're going to go ahead and see, this is the amount of shares that are available for trade. So if you look at Apple, they've got, what is that? What is that, a 15 billion, 800 million share float for Apple? No, there's two Googles. There's two Googles at 12 million apiece. You see, you got Goog, which is the C, and then Google. I mean, that's over 20. That's like 20. What is it? 26 million almost, or 26 billion share float. So these are the market caps, and that's why I look at these. These guys move the markets. If you come over here to visualize, we can say indices, S&P 500. Now you can see the size of these squares, and you can see that Apple. This is what the S&P is weighted to. So when the S&P moves, this is their weighting. This is what's actually pushing the S&P 500. So it's like Apple right now. What are they? They're worth a massive amount. Let's go ahead and let's pull that up. How much is Apple worth? How much of the weight is of Apple? Let me go S&P 500 weighting. Okay. Apple has, they've got the number one weight. They're 6%. 6% of the S&P 500. So when you look at like the ES, SPY, SPX, All of that movement, 6% of them is going to be because of Apple. Now, you could also look and say, well, is that the dog wagging the tail, or is that the tail wagging the dog? Is Apple making the S&P move at 6% a clip, or is the S&P as the ES futures or as the options on the SPX trade, are they moving Apple? And you see, that's all computer algorithm stuff. Everybody's got this figured out. And you see a lot of people just like say, oh, there's computer algorithms out there and they're attacking me. They're trying to get my stops. Maybe that's the case. I don't know. But the most of what the computer algorithms are doing is they're keeping those in balance. Because you look at all this. This is all part of the like S&P. This is also part of the NASDAQ. This is a complex structure. What's going on here? The market is a completely complex structure. And what happens is, as the market moves, there's going to be arbitrage in other places. And then arbitrage just basically means where you can go and you can make money with the same product someplace else. So let's say if these weightings get off as, say, the S&P 500 move, that's when the computer kicks in. And they say, well, Apple, basically, as the ES goes up, Apple should be going up this amount. And that's what the computers do. That's what the algorithms do. They're not out there, trying to attack stop losses or anything. That's what they do. Okay? So, anyways, let's go ahead and let's take a look at gold while we're here. Gold had a pretty nice run, back from November, the November lows. And that was a pretty nice run. That was all the way from 1618 all the way up to 1976. Gold had a very nice run. Okay, I'm gonna go ahead and pull up the gold position, at least a risk graph of the gold position that I do have on here. I'm gonna pull that up on Option Net Explorer. Let's go ahead and let's do this. We'll see how we're doing on this. I put it on probably like right here. But anyways, we'll see what we're doing. Let me go ahead and bring this into view. This is Option Net Explorer. You can, it tracks your trades. You can put your trades in. It tracks them. And, it's a pretty cool program. And this is my butterfly trade. Got 2 tranches on right now. Right now, where are we at? We are down $11. I was long gold. Didn't really materialize. I'm not sure what gold is going to do. Let me put this down here. Not sure what gold's going to do. Of course, nobody knows. I mean, these were 2 massive red candles. If it comes back up to that, I'd be pretty well shocked. But here's the deal. This position to the downside has a risk of $496. That's fine. Maybe I should go ahead and look at adjusting that. I'm going to do that tomorrow, though, while the market's open. Well, I can do that in real time. Basically, this trade is what's known as a broken wing butterfly. I got 2 tranches on. So if it goes up to where I think it is over the next few months, that could result, like, let's say on, if you look over here, April 3rd. So that's about a month out. This red line is about a month out in profit potential. We're looking at just around $1,000 if it goes up to 2090, which, that's a pretty high spot for gold. But as you can see, no matter how far it goes down, the most I can lose is $496, so about $500 at risk. So anyways, we're going to go ahead and we're going to adjust that tomorrow. While the market's open, we're going to make that adjustment. Well, that's great. I don't know if you all heard that. I don't know. I'm gonna put it in a room where no one is talking over here on my Discord. Speaking of which, I'm also in the Trade Busters Discord. The Trade Busters Discord. this is something you should join. Whoever you are. Even if you're a dog, you should join this group. It's really good. They run a lot of option strategies out of here. You're going to like it. First off, what you're going to want to do, though, is go to thetradebusters.com, and then you can get in touch with him. Go to the Tradebusters podcast. Listen to that. Listen to that, because that's good information. We'll talk about that a little later. Not today. I mean, not today. Not later. We're not talking about it later today. Anyways, let's see. What do we want to do today? Let's go ahead and let's take a look at what the skew's done in the S&P 500. And what is skew? You know, nobody's listening at this point. I'll guarantee it. Nobody is listening. So we can say, hey, what are we doing? Now, I got this chart from Trading Dominion. Trading Dominion. This is a paid service. This is probably the finest education you can get. Probably the finest education you can get as far as trading goes. They do lots of things. Well, they do a few things, okay? They do certain types of trades that are income strategies. Problem with this is that, yes, you have to have a lot of money to implement these. You have to have a portfolio margin account, which means you have to have an excess of $110,000 to run these strategies. But they're worth it. Yeah, for $1,600. I've made some money off of that course, man. I've made some money. But they also do auto trading. Teach you how to set up auto trading, and they do they got an account investing course too. It's very good. But I found them very, and they has charged. Guy's name is Ron. Best education out there for trading options or trading in general. It's top notch. So, but anyways, we'll take a look at the volatility here. And I can't share this chart. This is Ron's chart. You can just watch me use it. If you want to get it, join friggin' Trading Dominion. And no, there isn't a link in the description. There is not a link in the description because I'm not trying to make money off of you people. Okay? TradingDominion.com. Sign up. Not a link in the description. I'm not an affiliate. But join his group. Anyways, so this is the VIX term structure. What is term structure, you might ask? Well, term structure. I should probably make a whole video on this. This might be a good one topic for like a little 5-minute video. What is VIX term structure? I'm going to go ahead and do that. We'll edit it out. So, VIX term structure. Chart from Ron Bertino. So, when you look at the VIX, let's go ahead. Let's pull up. Let me see. What do we want to take a look at? Let's go ahead and let's take a look at the VIX option chain real quick. Okay. Let's analyze this. VIX options. No. Now, the VIX is kind of a complex thing in that you have your VIX options, right? But guess what? They're not triggered off the VIX. It's weird because this is where they're listed. They're triggered off the VIX futures. What are the VIX futures? Well, you can actually trade the VIX directionally by buying a future, if you didn't already know that. So VIX futures, this is what they're trading at. So this right here is the term structure. Where are the futures of the VIX trading at? And that is what is seen down here. Okay? You can see this blue line right here is the nearest term VIX future. So we look here. VIX 10, this is going to be that one. 20, that's going to be trading at $21 even, according to this. What does it say? Well, it says 19. That shit in my face. Right in my face. I'm going to have to edit that out now. Shit, I hate editing videos. Maybe I won't edit it out because nobody's fucking watching. I guarantee it. Anyways. So, let's go back over here. Let's see what we're looking at here. Let me pull this up. The VIX 90. Well, that should be the closest one at least, right? Anyways, that has 1 day to expiration. So you can see here that this is the active contract. It's 16 days to expiration. So that's why, is because this one here, you can see this one here, that's the contract we're looking at when we're looking at this. See, we're looking at the closest one to 10 days. The closest one to 10 days is 9, and you can see that the last price was 1966. Bid ask. Well, it's right in there. Who knows? Shit. Doesn't look like there's actually even any volume that's been traded on that. But look at how many futures there are. Look at this. This is the active month right here. This is the 16-day. So let's go ahead and let's take a look at this, at what I had said about the VIX and the VIX futures. Actually, I don't want to do that. I'm kind of done right now. It's been 36 minutes I've wasted with you people. And of course, when I say you people, nobody's watching. And I know that. And that's fine. I like talking to myself. I think I got a good voice. Maybe I'll get a web camera so you can see me. You can see what this voice is. See what this this voice is attached to. Trading in the Noise podcast. Hopefully I didn't waste your time. I know I wasted mine. I don't know. You want to look at Tesla? Let's take a look. Of course, there's no options open for it, so why am I even doing this? What am I even doing? We're going to change our chart. Oh, I was going to tell you what skew is. Okay. I don't want to do that. I'm tired. Oh, the options market's about to open. I'll probably just edit this whole thing out. So what is skew? I don't know if you've seen a skew graph before. Let me see. What's the best way to do this? What's the best way to do this here? Let's see. Let's take a look at the skew graph of Interactive Brokers. It's my broker. They got a really nice skew. Let's bring this in. So, skew is this. Skew is a plotted dimension of where the implied volatilities are for different strikes and different expirations. Let's go ahead and let's maximize this one here. So as we can see, we're plotting the implied volatilities here. These are the implied volatilities of the S&P 500 options. Let me, and I got to do something here. So you can see the bottom. Yeah. So you can see the bottom of the screen here. So there we go. Okay. So we'll take a look here. These are the expirations. This is for the March expiration that's coming up on March 17th. That's the big one. That's the big expiration. The end of the month expiration. Expiration, not exploration. That's this one. And you can see where the implied volatilities graph out for these options. And so that's what skew is. So if we go ahead and we turn on this April, which is going to be further out in time. Let's use that one. What happens is as you get closer to expiration, it starts to get a little bit wider, and that right there is normal. it starts to get a little bit more like a smile. You see? That's what that is. And so you might be saying, hey, okay, how do I use this? What do I do to use this? Well, I mean, the main way to use it is for butterfly type trades. And a butterfly type trade is for one for which you're buying an option here, like you're buying an option here, you're selling an option here, two options here, and you're buying one option here. And Ron Bertino in the Trading Dominion course does a fabulous job of explaining skew. Best I've ever seen. So if you ever get an opportunity to take a look at that, it's not a bad idea to go ahead and do that. But anyways, so you're buying an option here, selling two options here, buying a couple options here. And what does that do? Well, as implied volatility is basic, it's options pricing are based off implied volatility. So as implied volatility moves, so does options pricing. And if you can have a predictable manner in which skew is going to move, then you got a little bit more of a predictable way to make money in the market. Now, there's a way to measure skew as determined on a chart. That's not just like looking at these. There's actually something that tracks this, and it's called the SDEX. Now, this is probably the best way to track it. So if we go over here, let's see. I think I got an SDEX. Well, if I don't, that's okay. This is an XDEX. This is the SDEX right here. We're going to go ahead and pull up a chart that's got candles. Okay. And we're looking here. You can see, man, look at. Now, these are bad ticks. This is a bad tick. The skew didn't go all the way down there. But what the SDEX tracks is the skew. And we can go to the website for SDEX. I'm going to go ahead and pull that up right now. Let's go to the website. Let's see. We'll go to Google. I'm going to say SDEX. And we're going to go to Nations, I believe is the one that did it, right? Who built this thing? Here it is. SDEX. It's going to tell us what it is. So if we look here, this is this website, nations.com. Of course, if you just, Google search SDEX, you can pull this up. And this is going to be a really good resource. And skew is an important thing for trading options. It is, because a lot of your trades are going to depend on, implied volatility. So isn't it good to track the implied volatility of the individual options? It makes sense. So you can say option skew is not a measure of fear or implied volatility. It's a measure of how much risk market participants are willing to bear. Okay. Now, that being said, let's go ahead and see what is actually being brought into the skew. What they do. Okay, so here's where the money is. Nation's SkewDex index compares the cost of at-the-money options to the cost of out-of-the-money put options to generate indexes that are a better measure of option skew, a measure that is consistent with the way option professionals measure skew. Well, I'm doing that douchebaggy thing. Okay. Let's see, that's not the payoff really. Here's where we're looking. We can come down here at the bottom. The nation's large cap SkewDex index compares the implied volatility of the SPDR S&P 500 SPYs SPY option that is precisely at the money with the precisely 30-day to expiration to the cost of the SPY put option that is precisely one standard deviation out of the money with precisely 30 days to expiration. So what are we looking at here? Okay, we're looking at the at-the-money option. So let's go back to the interactive brokers. I'm going to put this on another screen. I'm going to put this on another screen so we can read this out to you. So we can say, hey, what are we doing? Okay. So we're looking 30 days to expiration. What's the closest expiration to 30 days? It's not that one. Where are we at? We are on March the 6th. March the 6th. Anyone? March the 6th. So that's going to put us, let's just do April. Well, we can do that April 20th. But that's not going to be precisely April the 6th. Okay, let's close these. So this is very precise. They say precisely. So this is going to be 30 days. Okay. Option that is precisely at the money, precisely 30 days to expiration. So at the money option is 40.48. Let's call it 40.50. Okay. My friend just passed a test. Anyways, 40.50. We'll call this one. This is the at the money. So if we're looking at the implied volatility, and of course we need to be looking at SPY. Dadgummit, SPY. SPY, please load SPY. At the money is 404.92. Let's say 405. That's at the money. As you can see over here, it is at 17% volatility, implied volatility. That's the at the money. Keep that in mind. 17% implied volatility. So what it's going to do, then we're going to go to one standard deviation out. One standard deviation out at that price. So typically the 16 delta is going to be one standard deviation out. Now I'm going to go ahead and pull up Thinkorswim. We'll go to, let's go to SPY. We're going to say one standard deviation is typically going to be about the 16 delta at that expiration. So we are going to go to April the 6th. And where are we going to find the 16 delta? We're going to need to show more than 30. Let's just go ahead and say, let's show them all. 16 delta. Going to be somewhere around the 382. 382, that's going to be one standard deviation. Roughly, let's go ahead and let's say that. We're going to go up here. We're going to say 382. Here's the 382. So when you look at that one's trading at 20.5% implied volatility. So it's going to go in through, so this actual index right here, what this is doing, let's get this up here. I got to get the hand so I can move it. So what this is tracking is what the difference of price is in between the at the money option, 30 days to expiration, and the one standard deviation option. And you might be like, what's a one standard deviation? What's a one standard deviation? What's a one standard deviation? I don't know. I gotta maybe send a message. I don't know. Night one. I don't want to send that one. I don't know if I should do that. Anyways, I'm not going to say anything there. I wanted to send a GIF, whatever. So this is what it's tracking right there. And you can see the skew opened up today. I did enter a position. You see, you want to get in to a position here for butterfly and have it go down there. And this is where you start making some money. Maybe I'll show you how to do that in a little bit. But you're going to want to take Ron Bertino's course. I'm not affiliated with Ron Bertino. Just want you to know that. So anyways, that's what that's tracking. And this is where you find it. You can type this in here, nations.com. Just Google search it. You'll find this sheet. And that's what it's tracking. And believe me, it's a big time thing. And we're going to go more into that because skew is a lot of how I trade. Okay? Skew is how I trade. I'm constantly trading on skew. Okay. It just gives it gives another dimension to trading. Okay, that adds time premium. Okay, and it's a delta neutrals strategy. We're going to go more into it. Let me see. Is there anything else I want to talk about? We're in 50 freaking minutes long. I bet YouTube won't even let me upload this video. I'm betting they won't. Maybe they will. I don't know. Listen, like, subscribe. Yeah, do that. Like and subscribe. You know? Help me get the word out. Like and subscribe, guys. Help me get the word out about what we're trying to do here. Because anybody that says that, they're trying to make money. Let's get the word out about me trying to make some money. Because I don't mind money. I don't mind it. I think, money's good. You can send me some money if you want to. I won't send it back. Okay?